Watch this video over here. 6 must-have rules for trading psychology and discipline. Another kind of more simple video I'm expecting. Nothing really about indicators. Nothing really about trading setups and so on. Kind of what SMB Capital is known for. This is more about trading psychology, trading discipline. I'm expecting this to be a great video to watch to start off the year with. You gotta have ironclad psychology in trading. Can't let losses mess you up and get emotional. And you gotta have the discipline to be patient. People always say patience pays, patience pays. But if you don't have the damn discipline to be patient, then you're not getting paid for shit. Right? So you got to be disciplined to be patient. For me, discipline is the key word. That's the key word. I've been telling traders like in the old office that you guys know me from for a long time that what is your word? What is your word? And they always go, oh, patience, oh, this, oh, that. And then when I explain it to them, look, you need to have discipline first. If you don't have that, you're not going to have the patience for shit. You're not going to have this for shit, right? Because you just don't have the discipline to follow your own system. Not gonna do it. So expecting this video to be great. Let's watch it together over here, and then we can wrap it up for the night, boys.
Lose money trading if you can't control your emotions
Oh,
while trading.
Beautiful. He just started off with a rewind. Rewind.
You'll lose money trading if you can't control your emotions while trading live. In this video, one of our senior traders reveals the 6 must-have rules to help you do just that. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
Nothing is more painful than taking one loss after another, being overtaken by emotion, and then digging yourself into a deeper hole by revenge trading. Soon, you're mired in self-doubt and you're a complete wreck. The elite traders in our firm see losses not as setbacks, but as opportunities to refine their skills. To guide you through this process, let's explore 6 fundamental rules to help you avoid these pitfalls. Rule number 1, emotional control. Recently, a new trader came up to me with a question. They shared a scenario where they got stopped out on a well-executed entry only to see the price move in their favor shortly afterward. Later in the session, they found themselves fighting the urge to trade outside their rules in order to make up for that missed trade. They asked what they could do in a situation like this. My advice, never trade if you're riddled with emotions. Take a minimum of a 10-minute break. The science behind taking a 10-minute break lies in the concept of cognitive fatigue. You'll know you're fatigued when you start getting emotional in trades. Extended periods of focused attention can lead to mental exhaustion, impairing decision-making, and heightening emotional responses. By stepping away, you allow your mind to reset, reducing stress and regaining clarity. During the break, engage in simple activities like stretching, deep breathing, going on a short walk, or just calling a friend to chat.
I do this all the time, man. Anytime you get tilted, anytime you have a bad trade, don't get emotional. Just get out of your chair, go for a walk, go get some fresh air. Talk to a friend. If you have friends, obviously retail trading is such a lonely place that you might not have people to talk to. For that, we have our amazing Discord server where we all day call out trades. We talk to each other. We help each other out. It's a community, right? Create a community if you don't have one. If you don't want to join my Discord, that's fine. Go join some Discord. Don't pay for it. I don't advise you ever pay for any trading Discords ever. That's a waste of money. Go join some sort of a Discord or create your own. Create some sort of a community where you can talk to each other with, and then anytime you lose, just kind of confer with your friends over there in that circle. Go for a walk. Number one best thing that we do at our workplace is just get up and go for a walk. It saves you a ton of money, and when you go for a walk, come back, you might have a little bit clearer mind a little bit, right? So great suggestion over there. Let's continue listening to the rule number 1.
These actions trigger the brain's relaxation response, reducing cortisol levels associated with your strategy consistently. At SMB, we build chart archives and playbooks for specific patterns we like to trade.
Chart archives. You guys listen to this? I just talked about this. I guess this is come from Lance, because Lance works for SMB Capital as like a advisor and so on, right? Wait, Am I still on full cam? Oh my god, I've been on full cam this whole time. How long have I been on full cam? All the time, man. Anytime you get tilted for a walk, this choice or get up and number one.
Or logical and deliberate.
I've been on full cam this whole time. Jesus Christ. All right, let's rewind a little bit. Can we just watch the whole video again? Full cam, full screen. Okay, rewind a little bit.
And traders, whether they should use a fixed position size for all trades. The answer is absolutely not. Different stocks exhibit varying levels of volatility.
Oh, it's actually,
for instance,
this is good because I didn't pay attention to this. This is good.
Rule 2, a simple risk management rule. I've been asked countless times by new and developing traders whether they should use a fixed position size for all trades.
Okay.
The answer is absolutely not.
Yeah.
Different stocks exhibit varying levels of volatility.
Right.
For instance, Tesla is known for its significant price swings, while Ford tends to be less volatile. Trading the same fixed amount of shares in both cases exposes you to proportionately higher volatility in Tesla compared to Ford. Volatility can lead to larger price swings, impacting your risk and potential profit. A fixed share strategy doesn't adapt to the inherent risks associated with each stock. It can make effective risk management challenging, as stocks with higher volatility might require a smaller size to manage risk effectively, while less volatile stocks may allow for larger positions. First, determine the dollar amount you want to risk on the trade. Identify where your stop is, which is typically based on technical analysis, and then just quickly calculate how many shares you can buy to reach that stop loss level. For instance, if you want to risk $2,000 on a trade and you plan to go long and risk to a previous high or low that's 50 cents away, well, in that case, you should buy about 4,000 shares. This is the way we manage risk here at SMB. Before each trade, our risk is defined and there are almost never any surprises. In addition to that, a simple risk management technique is to average out your last 5 winning days and make that your daily stop loss.
That's what
you're never losing more.
My broker automatically does that, so I don't have to worry about it.
I really think that this is a great daily stop strategy for new and developing traders to ensure that they're able to stay in the game.
Yeah.
Rule number 3, adhering to your strategy consistently. At SMB, we build chart archives and playbooks for specific patterns we like to.
So this is what we were doing today with Pfizer. We were talking about how we were playbooking Pfizer. I was actually playbooking Dollar General here in the background. That's why we were stuck on the single face shot for so long, because I thought I was showing you guys the video, which I was listening on the background while working on my write-up over here, because obviously I don't have much time left on the day here. If I have to go to bed at 10:30, I have to finish this write-up. So I finished the write-up. Very important. We did the Pfizer one with you live. We also put in the Moderna chart in there for ourselves. But yeah, Dollar General write-up is what I was finishing, and he was talking about that exactly right now. It's like, how does SMB Capital do this part of their discipline
to trade, such as breaking news, gap and go, a backside trade, and a second day? We study these patterns, mark up the charts, backtest, use technology to alert us to these patterns or tickers where these patterns could show up. Then we wait patiently. Something we often see new and failing traders do is invent trades on the fly. This is a concept Carlton, our risk manager, came up with during a trader review meeting. One trainee took a playbook trade, mismanaged it, and was upset. Shortly after, out of frustration, this trader started chasing every pop purely out of FOMO.
No.
Carlton simply asked him, "What trade is that?" There was no answer. It wasn't part of his playbook. It wasn't a play from his playbook or chart archive. It was a trade that was invented on the fly. Sticking to your patterns is crucial. These are strategies you've dissected and understood. Your tried and true methods for navigating the market's twists and turns. Deviating from them introduces unnecessary risk. Before executing a trade,
very well put.
What is this setup? If you don't know, save yourself some money and skip it.
Yeah.
This leads us to our next rule: patience and discipline. A question I get pretty often is, how many trades do you take a day on average? I have to be honest, I hate this question. If I see my setup appear 5 times in a day, I'll take 5 trades. If I don't see anything setting up for my playbook, then there are no trades for me to take. Day trading is not about meeting some trade quota. It's unique in that you don't need to take a trade every day, especially if there is no setup or edge for you. Never once have I been questioned by my risk manager if I did not take a trade.
Not a single thing is moving here, dude. Not a single thing is moving here.
I did not take a trade during a session or only took a couple of trades in the span of a few days. This emphasis on patience extends beyond waiting for favorable setups.
Yeah.
It's also about waiting for the right market conditions. Markets are dynamic and not every moment is conducive
Someone's
to
beating up the
trading.
wall in the
By
background. They just
exercising
lost the
patience,
trade.
I avoid unnecessary risks.
You guys
and
hear that
ensure that
knocks?
each trade is well considered and aligned with my overall strategy. Here's a fun fact for you. Here on the desk, we did a rough estimate in our monthly review meetings, and we found that the best traders evaluate about 4 to 5 trade ideas for every one trade taken. This means for every 5 trade ideas that come across their screens, they're pressing the keys on just one of them. Discipline is the guardian of consistency in day trading.
I guess a good point.
It involves adhering strictly to predefined rules and not letting emotions dictate decisions. Discipline prevents impulsive actions that can lead to losses.
There you go.
Every trade is a product of careful analysis and the adherence to a set of rules that have proven effective over.
This guy's half his screen is not used. Bro, your screen is already like a 10-inch monitor and half your screen is not used. This guy's productivity level is like negative 1,000.
Over time. Rule number 5, size down. When confronted with consecutive losing days,
this is
the immediate reaction for many
number one
traders
rule.
might be
Helped
to
me a lot
intensify
during my
efforts to
drawdowns.
recoup losses by taking larger positions. However, this approach can be counterproductive as it amplifies the risk of significant drawdowns and erodes confidence.
Yes.
In contrast,
It has done that to
adopting
me.
size down after a predetermined number of losing days demonstrates a disciplined and methodical approach to risk management. If you're on a losing streak, size down until you print a few green days and regain your confidence.
Right on.
Traders at all levels lose some of their edge and consistency at times. Here at SMB, many traders have a rule in place. If they lose 2 or 3 days in a row, they will cut their size until they print a few green days and build back their confidence. I know that's not exciting, but it's a necessary part of trading, especially if you want to do this for a living and have a long career. I know some of the best traders on the street that have gone from a 6-figure daily stop loss down to a 4-figure stop during times when the market is slow or when they are taking on more heat than usual. This practice is not admission of failure, but rather a strategic maneuver to preserve mental capital. It emphasizes the understanding that the market dynamics fluctuate and periods of reduced edge or heightened volatility may warrant a more conservative approach. And lastly, we'll talk about dealing with losses. Losses are an inherent part of trading, and how traders handle them often distinguishes the successful from the struggling. It's all too tempting, especially after a bad day, to simply step away from the screens and try to forget about the loss. However, the path to improvement and sustained success lies in confronting these losses head on and extracting valuable lessons from them. Real traders, those committed to growth and continual improvement, approach losses as opportunities for learning and refinement. Instead of shying away from the discomfort of a losing trade, they embrace it as a chance to analyze their decisions, strategies, and overall approach. The first step is to conduct a thorough post-mortem analysis of your losing trades. This involves asking tough questions like, what went wrong? Were there signs or indicators that I overlooked?
And that takes discipline too, you know? Like, there's been days where I had losing days and I was like, nah, fuck this. I'm not going to review my trades. Fuck this. I already know what I did wrong. I'm not going to bother with it. And then I repeat the same mistake. But then when I actually, you know, review my mistakes, kind of imprint it into my head, it stays in my head a little bit longer. I tend to not repeat those mistakes again. The same kind of way where if you write down the trades that you missed and wanted to take, like we did today on DG and Pfizer, that will help you stay in your mind a little bit longer
In essence,
Instead of just being
treating
like, oh,
losses as
look, that
valuable
trade was
feedback
there, we
rather
missed
than
it.
as
Ah, okay, when I
failures is
see
a
it again, I'll
mindset
take
shift
it. No, write it
that
down,
separates
note it
proactive,
down, and when you do
growth-oriented
see it, you pull
from
up
those
that
who
trade,
stagnate.
be like, oh, this looks like that
Every
trade.
loss becomes a
You have it
stepping
written
stone
down, you
toward
pull it up, you
refining
look
and
at
honing
it.
one's trading skills.
Now you look for
It's
the
an
trade.
ongoing
Now you have the
process,
confidence. Now you have
self-evaluation,
the
and
the
adaptation.
extra edge
Successful day
that
trading
other trader
extends
doesn't.
beyond technical skills. It hinges on discipline, resilience, and continuous improvement.
Yes, sir.
The 6 rules discussed form the bedrock of a prosperous trading journey. Remember, losses are opportunities for growth, not setbacks. Incorporate these rules into your routine to safeguard your capital and foster the patience and discipline necessary for navigating the markets. Lastly, all traders need to understand that success isn't avoiding losses, but learning from them.
Yes,
Embrace
sir.
challenges, stay
Yes,
disciplined,
sir.
and let each trade contribute to your evolution as a trader.
So you're an active trader.
Let
not
each
doing as well
trade
as you want.
add and compound to your evolution as a trader, and you keep on growing to the goals that you have set yourself for and achieve more than that. May 2024 be our year, and we all achieve everything we aim for. Ladies and gentlemen, thank you for joining me for the past 2 hours. It's been a wonderful stream. It's been great being back. It's been great being live again. And let me tell you, I'm on a mission this year, and you're gonna see a lot of things happen this year. So stay tuned. We're gonna have a lot of fun, and things are just getting started. 2024. See you guys tomorrow, same time, same place. You know what to do. Have a good night, ladies and gentlemen. Have an even better trading session tomorrow. Peace.